you had a model that was essentially working in terms of very, very fast growth, very quickly in a market which looked quite dramatically different from the market that we've been facing in the last few months. Interest rates have spiked dramatically. How are you guys pivoting? How are you thinking about your business now?
Well, you're right that the macro environment has changed a lot. We went from an extreme bull market where money was very cheap for high growth startup companies, and a lot has changed. But the way that I would describe the change in the context of the real estate market is we're returning to normal. What was happening over the course of the last few years was not normal. Homes selling for large percentages over ask in a matter of hours with multiple offers, all cash. That's not a normal real estate market. And I think this return to normalcy that we're experiencing is actually going to be really healthy over the long term, because what we were experiencing before was not sustainable. And what it means is, slower transaction volume is definitely one change that we're seeing. We're seeing homes sit on the market for longer before they sell. We're seeing homes sell closer to their ask price as opposed to well above their ask price. And as I mentioned before, I think that's healthy. For our business in particular, it's important for any business, regardless of the environment that you're in, it's important to be agile in the way that you run the company. And in our case, that meant making sure that expenses are aligned with revenue, right?
That meant layoffs and other initiatives that you had to take, slowing down expansion into new markets, correct?
Exactly. I mean, I think what you're seeing, frankly, with almost all companies right now, especially all high growth, early stage companies like Pacaso, we had to make adjustments to ensure that our expenses were aligned with revenue. And again, that just kind of comes with the territory.
What is the long-term profit center? So you sell, and please correct me if I'm wrong, you sell fractionated ownership in homes. You can buy, a minimum of 1/8 of a home, but you can do more than that. Is the long-term profit for Pacaso on kind of the upselling on the fraction, or is the long-term sort of the biggest base of profit going to be ongoing management fees in properties that you've already sold?
It's a combination of all the above. So we're a marketplace that provides a variety of services to our customers, ranging from designing homes to furnishing homes to paying all the bills, coordinating repairs and maintenance. We basically enable owners to enjoy their second home for less cost and much less hassle. The revenue stream consists of a markup on the real estate itself. So we charge a 12% markup on the real estate, and that's one of our revenue streams. But we also provide property management services. We provide financing services. We facilitate resale transactions, when somebody wants to go resell their Pacaso or trade into a different property. So there's a very long tail on the relationship that we have with all of our customers. Once a home becomes a Pacaso, it stays a Pacaso, indefinitely for most cases. So the way that I think about the long-term opportunity really just goes back to the mission and to the TAM. This is a huge market. I mean, 75% of people above a certain income threshold aspire to own a second home. So we're talking tens and tens of millions of people. And most people are unable to afford or unable to justify owning the whole thing because the average usage is only 5 weeks per year.
I wonder what kind of conversations you're having with lenders now, because their landscape has changed very dramatically in the last 3 months. So can you continue? You think you can continue offering that kind of financing heading into 2023?
Well, as a general rule, I expect our financing terms to move up and down with the market, meaning in a rising rate environment, you can expect that our rates will rise. And in a falling rate environment, you can expect that the rates that we offer to our customers will fall. It is true that we have a really amazing, offer right now, which is 3.95% financing, but it's only available to people who are in a position to put 50% down. So the rate's actually a little higher than that if you take advantage of the 60 or 70% financing offer. And the reason why we're able to offer that is because we have several banking relationships, and we've locked in a lot of financing, at really great terms as the rates were rising.
How far are you from getting into the black? Can you talk about, you're not profitable yet, safe to assume. Do you have a kind of a rough timeline based on where the market's at, where you guys are at?
Yeah, so the business is actually doing, very well relative to the macro environment that we're in. We're certainly not growing as fast as we were before. We were growing at 300% year over year or more. This year we'll deliver about 100% year over year growth, which is still quite good, and very
That's in terms of revenue and other metrics.
Yeah, revenue, gross profit. Yeah. So again, not growing at 300% year over year, but we think 100% year over year is pretty good, especially in this environment. And part of the reason why we're growing a little slower now is because we're essentially trading growth rate for a faster path to profitability. In a business like this, the faster you grow, the longer it takes to get profitable, because you're essentially front loading investments in growth. Mm-hmm. This presents us with an opportunity to really get to profitability a bit faster. So we do have a clear line of sight, to the path to profitability. We've got a long runway. Fortunately, that Series C round that we raised about 1.25 years ago, most of it's still sitting on our balance sheet. So we have, we're in a very great position, and even growing at the slightly slower rate, we're really pleased with where the business is at.
But some of those VCs that backed you, and I know you had a pretty star-studded list of investors, the tenor in those companies has changed as well, right? They're, instead of saying, Austin, go forth, they might be like, Austin, what's going on with Pacaso? Like, when can we see something? Is there renewed or greater sense of impatience, a little bit of nervousness from the investors?
They're super excited about the business. They're super bullish about the long-term opportunity. They, like most investors right now, are certainly, cautious in the way that they're thinking about 2023. The market in 2023 is probably, it's anybody's guess. No one has a crystal ball, but it seems pretty likely that this recessionary sort of macro environment is going to last a little while. So our investors want us to execute responsibly, but they're very bullish and very supportive of the business. We're not actively in the market to raise money. If we were in the market to raise money right now, I'm sure that the terms wouldn't be as good. Yeah.
Any new model, especially when it comes to home ownership, which is the most emotional asset there is in the average American's life, any new model ruffles feathers, right? There's anything you want to do that's different from the way it's been done for 300 years is going to cause a lot of hoopla. Pacaso hasn't been immune to that. There's been a lot of groups, neighborhood associations, political pressure to start regulating this kind of home ownership.
Well,
and just, I want to be super clear. I understand that anything new will create that kind of thing.
Yeah. I appreciate you leading with that, because you're exactly right. That's been my experience as well. At my last company, as an example, we were one of the companies pioneering e-signatures in the real estate space, and for the first 4 or 5 years, we had so many critics challenging the validity of e-signatures and claiming that e-signatures would be less secure than physical signatures. And of course, the opposite is true. E-signatures are actually far more secure and far more efficient. And
I remember there were some localities you need to use a specific color of ink. You can't
exactly. Exactly. So right. You're right that it takes time for new categories to be understood. And co-ownership's no exception to that rule. But I think it's important to start with the fact that co-ownership is the future for second homes, and frankly, I think it's the future for almost any underutilized asset class that produces waste. I mean, this is a model that really eliminates a lot of waste. It makes this asset class accessible to a large group of people. It frees up supply by redirecting demand away from the median tier into the luxury tier. It better supports local economies because you have owners in the home using the home year round. Like, this is kind of a no-brainer solution for second homes that have historically just sat empty for most of the time. So, I have zero doubt in my mind that co-ownership is here to stay, and that it's going to be a very meaningful portion of the category. In terms of how the regulatory world sort of plays out, we've one of the things that's been really cool, and I guess in general is cool and fun about creating a new category, is you have an opportunity to sort of partner and collaborate with, in this case, regulators and municipalities to define the roadmap. So we recently, as an example, the
Mayor of Austin, I noticed, is part of your advisory board, right?
Yeah, we have a advisory board that includes several, current or former government officials, and they give us feedback on our model and our strategy. And but the example that I was about to share is we recently partnered with the city of Park City, and we pioneered a new regulatory framework that is the first of probably many frameworks like this that will play out in the future. So that's how I expect it to roll out, which is we'll continue to collaborate with all the municipalities where we operate. And I think together we can make a difference. Together we can eliminate waste by eliminating all these empty second homes that are sitting in these towns, and create more opportunity for the people who want to live in and enjoy these communities. I
think the broader, and there is a lot of doubts about this point, but a lot of people say, look, the single family home wasn't meant to become a plaything for investors to go and just being able to. The commoditization of the home, which Pacaso is very much a part of, is trying to make it a more marketable, tradable asset, which is part of why I'm interested, is never supposed to have happened. Homes were not supposed to have been made into these tradable assets like that. So what's your response just broadly on that?
Well, homes are tradable assets, and they have been for a long time. If you buy a home and you decide that you need to move or sell it, you can list it, right? I mean, so real estate has been traded for many, many decades. I mean,
correct, but not in this zoomed out way by investors. And I think that's part of the broader debate around single family homes. You've seen this, and this is not your industry, but single family rentals. Right. There's been a lot of discussion around it.
I don't have an opinion to share on the institutional, home buyer and owner category. That's not really a space that we're in. We're in the space of providing families, with the ability to own real estate, and we're a facilitator and a manager of the experience on their behalf. But with our model, what happens is families are buying the home of their dream, and they're enjoying the communities and contributing to the communities where these homes exist. And Pacaso is providing the service that makes the experience seamless. So,
and there's no rental, there's no income generating aspect for these. Okay, because
I mean, it's really Hiten. It's really, I mean, the easiest way to get your mind around our model is imagine if you and 3 or 4 or 5 of your friends or family members wanted to own a home together. You would structure it in the exact same way, that Pacaso is structured. You would own it in an LLC. You all would have some way of deciding how the home is used, right? You might use a Google Calendar. You might use a spreadsheet. Right. You might use a software like the one.
I know a couple of people who've actually bought through your platform. So I'm very intrigued by it. So don't get me wrong on that. I was just wondering, if I'm a real estate fund and I want to buy shares in 30 of your homes, has that kind of thing happened? Have you seen that kind of? evolution of ownership? Okay.
No, yeah. I mean, this is not an investment product. If you were to come to us and say, hey, my goal is to generate 20%, annualized returns, and I want to invest in real estate, we would say, sorry, you called the wrong company, like go buy a public REIT or something. Like, this is about people who are looking to own and enjoy homes for their own personal use. And it really speaks to an audience of people who, just aren't going to use the home, for the whole year. I mean, if you're going to use a home for more than 6 months a year, you should just buy the whole thing. At that point in time, I don't think the value of co-ownership really makes quite as much sense. And if you're going to use the home just once a year, you should probably just rent. You shouldn't own. Yeah. But for everybody in the middle, like if you're going to frequent a home multiple times throughout the year, but less than 6 months per year, this co-ownership model really works quite well for that. And that happens to be the primary use case for most second homes, which is why the market opportunity for us is so large.
Let's talk a little about this other universe of stakeholders in this whole thing, which is real estate agents. I want to know how your relationship, if I remember correctly, it was 3% you paid to agents, and then you give them some RSUs as well. But how has your relationship with real estate agents evolved over time? How do you see them kind of playing a long-term role in your company?
Yeah, real estate agents are such an important part of the Pacaso ecosystem. We view them as an extension of our team. They're essentially partners of ours. So the way that real estate agents use Pacaso, I would sort of think of it like a tool in their toolkit to add value to their customers. Like most real estate agents have a pipeline of people who are shopping for homes. Many of those people who are shopping for homes don't have the budget to afford the home that they really want. Like maybe they have a $1 million budget, but they're looking at a place like Aspen or Vail or Tahoe or Napa, right? Where $1 million doesn't buy you that much. So $1 million buys you a lot with Pacaso. $1 million buys you an $8 million home. I just was talking to one of our new owners the other day, who recently bought a home with us in Vail. Before she decided to buy a Pacaso, she called her real estate agent in the market, and she said, hey, I have a $3.5 million budget. And so they went out and they searched for homes in the $3.5 million range, and Vail's a very expensive market. So what she found is that for $3.5 million to be in the main area, she was going to get a small 2-bedroom condo. And that just wasn't enough for her and her family, because a big part of what you do, when you're at your home, is you spend time with people you love, right? In particular, your family. So she wanted a place where she could host her family, enjoy, the beautiful ski amenities in Vail. So she ended up spending half of what she had budgeted. Instead of 3.5 million, she spent 1.5 or 1.7 and got a $15 million home with Pacaso. Gotcha. Right. And she's like, this is just an absolute no-brainer, because I spent half the money and got, 4 or 5 times.
You're in a freaking, way upgrade, sort of a big upgrade on what you were.
Exactly.
So that $1.5 million, you pay 3% of that to the agent, right? That's how it works.
We pay a full commission to any real estate agent that, represents a buyer or brings a buyer to Pacaso. And the way that, and also we make it as easy as a referral. If I live in San Francisco and I have a client that wants to buy in New York, I can refer that business to another agent in New York and earn a 30% rebate, which is on a 2.5 or 3% commission. That might be somewhere between 75 bips and 1%. With Pacaso, you don't just make the 75 bips or 1%. You make a full 3%. So you're earning a full commission, but we do all the work. We make it as easy as a referral, and we pay a full commission every single time.
You talk about Pacaso as being as one of the solutions for improving sustainability in the built environment. Break that down for me, please, because I don't get it.
Yeah. So think of it in the context of carpooling. Like, would you, if you were concerned about sustainability and traffic and waste, would you prefer to have one SUV full of 8 people or 8 SUVs with one person per vehicle driving down the highway? Of course, you'd prefer to have one SUV with 8 people. The typical second home, which sits vacant 90% of the time, is like an empty SUV driving down the highway. Our model enables up to 8 families to share one home. So every single home has a carbon footprint, right? Every single home that's sitting vacant 90% of the time has a bunch of waste. Our model is eliminating up to 7 wasted homes for every one Pacaso that we bring into the ecosystem. So that, at the most basic level, that is how co-ownership contributes positively to sustainability. Now, to be totally clear, like we're tiny, we're just getting started, right? It's going to be years and years and years before, we have tens, eventually hundreds of thousands of customers, at which point the sustainability impact will be larger. I think we're making a difference today on a very small scale, but where co-ownership has an opportunity to make a big difference in the future, that will come with scale. Yeah. And, I guess the last thing that I'll leave you with on this front is, if there's one thing that I know for sure about sustainability, is that empty second homes are definitely not sustainable, right? That is what we want to avoid. And that's really what we're focused on here.
I think that's a nice way of illustrating it. If we were talking in 5 years, what's the moonshot for Pacaso? Give me there's plenty of things that can go wrong between now and then, and there's plenty of things that can go right. If things go right, where are we? What kind of conversation are we having in 5 years? And we'll end there.
Well, long term, I don't know if it's 5 years or 10 years or 15, but, long term, I really believe that co-ownership will not just be something that's, sort of known and viable, but I think co-ownership will be the preferred way to own a second home for most people, because most people, regardless of how much money you have, most people don't like to waste. Most people don't like to throw money away. Mm-hmm. Most people like to get more for their money if they have that option. Most people prefer to avoid headaches and hassle and stress, all of which are things that come with whole home ownership. So this is a model that I think is going to appeal to lots of people. And for us, it'll mean, millions of customers and, lots of homes across lots of markets at lots of price points. Like right now, Pacaso,
you're going to drop the floor quite a bit, and then you can also raise the ceiling a fair bit if this goes well, right?
Yeah, totally. And I think Pacaso will always be in the luxury business, meaning that because co-ownership empowers people to buy 8 times more home than they can afford on their own, sort of by definition, it causes people to get into a higher level of home. So I think for that reason, Pacaso will always be luxury. But when we get into markets that have more reasonable price points, you will see the average share price come down. Like right now, we're operating in some of the most expensive markets in the world.
You're in Miami Beach and you bought some homes at a pretty high point in the market. So I wonder about that kind of thing. Are you holding those on your books at the moment? Some of those homes in Miami?
Well, remember, most of the homes that Pacaso, has and on our website, are not necessarily homes that we bought or owned. Like there's lots of ways that homes come into our ecosystem. We partner with builders who bring us properties. Sellers can sell down their homes, right? You could choose to sell 50% or 75%. So it's not like Pacaso just has to go out and buy homes and sit on homes.
You're not in an open door type of situation.
No.
Okay.
No.
Okay.
Yeah, very, very different model in the way that we bring inventory on. And we also we're not like the owner of these properties. We're not like an institutional homeowner. Like when we're simply facilitating the service for other families to own the home. So once the home is fully subscribed, it's owned by those families. And when the real estate value goes up or down over time, like it just trends like it would for a normal homeowner, right? But I think most of the markets that we're in are markets where inventory is very tight. And they're markets that have experienced a permanent step change in demand following the pandemic. Mm-hmm. Like there are 10 times more people today, 10 times more US workers have the flexibility to work remote than when compared to 5 or 6 years ago. So that created a permanent change in demand in many of these markets where we operate.